Ladies and gentlemen, margin calls look closer now than you have seen in quite a long time. Markets are falling over the last couple of days, dropping by about 2.5%. NASDAQ down another 1%. And we haven't even got to the catalyst yet, baby. So we're going to talk about what's currently happening on the day today, how liquidity is starting to be stretched. We're also going to look at AMC stock because if you take a look on a technical basis, you are firmly in the center of the demand zone. So let's get into all of this information. Not to mention all of that, we have a major catalyst coming in at 2 p.m. today, as well as in the next 20 minutes or so. So buckle up and let's get into it, guys. So first things first, what's happening today? So you're getting some comments out of OPEC, and that is kind of leading people to assume they're going to cut production, that oil prices are going to go higher. Bad news for inflation. You're also getting some mixed data here and there from banks. We're kind of digesting what we have heard over the last couple of days from Fed speakers. Nothing that is quite breaking news yet. Now, this came out from McCarthy 28 minutes ago. I'll provide an update on the negotiations for a responsible debt limit this morning at 11:45 Eastern time. So by the time this video is coming out at about noon Eastern time, markets are going to be reacting to whatever McCarthy is saying. Now, on one hand, obviously, if the government does default, bad news. Everyone loses. The real economy loses. Not just the markets, not just the bond market, but the real economy would lose. Nobody wants that. That's a very low likely outcome, right? But there's only 8 days left until we possibly default. A lot of analysts are saying, hey, it's going to probably take 10 days to get a bill passed through the House, the Senate, and signed by Biden. So doesn't really sound good with the timing that we're currently seeing. Every day that ticks by, the odds of a default do go up. But again, defaulting is really not an option, right? When it comes down to it, they're not going to default. But I've talked about this before. This might be just negative in general, because if there is big spending cuts to the government, that was a big source of stimulus over the last year and a half. That's kind of why the markets have held up decently well, because the government still spending trillions of dollars to try to add jobs and stimulate the economy and so on and so forth, build back better plan and all the other things that we have seen. You're not getting stimulus checks anymore, but they are stimulating. A lot of that looks like it's going to be rolled back, and markets are not going to take that as a super positive thing, at least in my personal opinion. So we'll see what happens there. The big catalyst coming in later on today is the FOMC minutes. Now, Fed Jerome Powell was not scheduled on the economic calendar to speak yesterday. You can see Tuesday, nothing about Fed Jerome Powell is here. But he did speak at a Democratic convention, which is weird because he's a Republican. But besides the politicals, we didn't hear anything. We got no update. We got a picture of him walking in, and he did not take comments as he was walking in. We didn't hear anything else. There was literally not one headline. That never happens. So I don't know what to make from that. Doesn't sound good just off of face value. And maybe we get an insight to why that is with the Fed minutes. If the Fed wants to throw something in there to kind of curb expectations or to mold the markets into, pricing in what the Fed's going to do, well, it's probably going to come here with the FOMC minutes. And if you guys are unaware, this is kind of the transcript of the last Fed meeting. Kind of can give you more details to why the Fed did what they did at the last meeting. So that's going to be big, coming in at 2 p.m. Eastern Standard Time. But I think bigger than even the debt ceiling, granted, if we don't default, the FOMC minutes or even the economic data throughout the rest of this week is going to be today and after hours. You're going to get NVIDIA that is going to report earnings. Now, NVIDIA led the way in the AI hype, and everyone has followed suit. Google, Microsoft, your largest companies in the world. We've talked about this many, many times now. Well, they're going to be reporting earnings. And if NVIDIA does fall and send down the whole AI sector, that's going to turn out to be a very negative thing. And you've seen big tech kind of start to give it up here today. Most big tech stocks are down. If we look at NVIDIA is down about 2.25%. So it looks pretty negative face value heading into their earnings, guys. So I think that this could be a big moment for big tech, especially considering the rally that we have had. And when you mix all of these things together, the liquidity situation does not look good. Okay. Granted, we're very high with these names, and the collateral that they have pledged, shorts have pledged to their short positions, has only increased in value in 2023. If you see those stocks fall, you're going to be put, hedge funds are going to be put in a very bad situation very quickly. NVIDIA could, it could get bad for NVIDIA if investors don't like what they say. So I think you're one step closer to that today. Seeing the indexes fall almost 1% across the board is not good, but we're not quite there yet. But again, we have a lot of catalysts that are going to even be happening today. And then not to mention, after the catalyst today, on Friday, you're going to get core PCE. Core PCE is expected to come in at 0.3%. Last month's reading was also 0.3%. I think some of the Fed speakers talking so hawkishly is probably because they know this core PCE number is going to come in higher than expectations, kind of trying to get the markets used to or preconditioned for a bad inflation number. Now, you're also going to get personal spending as well as personal income month over month on Friday, and durable goods orders month over month. So you're going to get a lot of data coming on Friday, but again, I think NVIDIA earnings as well as the debt ceiling and the other factors we talked about here in this video are going to be even more important. Now, let's dive into specifically what is happening with AMC stock here today. AMC down about 2.39%, 25.19% estimated short interest of free float. 130 million shares currently sold short. Cost to borrow average 66.5%. Cost to borrow max 70.65%. Cost to borrow minimum 31.26%. Interactive Brokers has a cost to borrow fee of 57.5%. These numbers are very volatile. They definitely are going back and forth. What we seen yesterday was a cost to borrow max of 356%. So the numbers here are very liquid, they're very fluid, they're moving around quite a bit. What is not changing is the option activity that you are seeing in AMC stock. It is very negative. Hedge funds, they're synthetically shorting AMC stock. There's literally no other way to put it. They are buying deep in the money puts. They are forcing market makers to short the stock instead of them having to go out and short the stock. And what that does is you still get the same shorts. The short interest is still the same, but it's not reported to us in the Ortex data. And on days you see a lot of this, bearish option activity, today even being one of them, you are seeing 6 orders totaling $2.13 million. The volume on these expirations for AMC is actually quite bullish, right? It's retail. I mean, retail is quite bullish on AMC. The volume for this Friday is 80.33% calls, 19.67% puts. That's super bullish no matter what name you're looking at. And AMC just goes down. It just keeps going down. That don't make a whole lot of sense to me. But when you consider all of the shorting market makers are doing right now, that does make a little bit more sense, okay? Now, if we take a look at the Fed rate monitor tool, this is what the Fed might be trying to fight here. If the Fed does see higher inflation reports coming, keep in mind the Fed does get inflation reports before we do, so it's very well possible Bullard came out and said we should hike rates twice. Former Fed Chair Ben Bernanke came out and said there's still more work to do. Other Fed Bostic said essentially the same thing. Maybe they're all saying that over the last day or two because there's a 71.8% chance of a pause in June. If the Fed wants to leave their options open or even hike rates in June, the markets are not pricing that right now. Not at all. So it makes it more interesting for the data that we're going to get, not to mention the debt ceiling, NVIDIA earnings, as well as everything else, guys. So there is that. If we take a look at the technicals on AMC stock, AMC firmly in that demand zone. That demand zone, like I said, is in between $5 and $4.80 per share. You're at $4.91 per share. So you're right in the middle of that demand zone. And I would expect to see a bounce higher into the close of the day today, or at the very worst, not breaking under $4.80 per share. I expect to stay in this demand zone at least until something breaks, or we get new information, or bad news, or good news for that matter. I don't really expect to, move out of this demand zone, especially to the downside, without any catalyst or news. So there you have that. If we go ahead and pull up some of our favorite indicators like the MACD, that is negative here in the short term, but in the midterm it is pretty neutral overall, sitting at about this neutral level of 0. If we take a look at the RSI is getting oversold now at about 41. Technical oversold is 30, technical overbought is 70, neutral is about 50. You are under 50 by quite a bit. Pretty indicative of a future bounce that is likely to be coming with AMC stock. Now, there's a lot of things under the surface, right? We know there's a court litigation process that is going on. Any of that news will really take precedence over anything else, with AMC specifically. That's going to cause AMC to move 20-30%. I can't sit here and forecast to you guys what's going to happen or when it's going to happen, but I will tell you that some people are starting to get more bullish on this court process, guys. So that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys do want to come trade with me live in real time, link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.